framework for where we actually stand today with the clean tech industry. We got these expert panelists in front of me. I have a couple of questions for the audience, and I have a couple of comments just to sort of stir the pot up a little bit, make it a little bit controversial too. Hopefully make it fun for all of us. And I want all of you guys to be asking good questions. I want you guys all interacting and asking good questions. The first question I have is, what do you think is in common with all of these clean tech companies that you see on this list? Three things in common. One of them is they all failed, yes.
Solar.
No.
No.
Well, I mentioned clean tech already. In addition to that, two others. You've said they already failed. Two others.
Venture back. Government funds.
All venture backed. They all have government funds. And we're talking about significant amount of funds. We're not talking about small amounts of money. All of these companies, in our view, have crossed that valley of death that we've talked about.
You left out one very, very important.
Okay?
They were all politically connected.
They were all politically connected.
Disagree.
Many on this list were.
Many may have been.
Many of them are, yes. Well, we'll talk about that because this is going to drive some of the discussion also. It is a good point. Keep that in mind. Let me move on to the next slide. If you guys were young enough like me, or old enough like me actually, you will remember the telecom bust, right? 2001. I know some of you guys talked about this. 2001, the amount of the collapse at that time was staggering. 500,000 people lost their jobs. You look at the Dow Jones, the communications tech index dropped 86%. Wireless communications index dropped 89%. These were declines in value worthy of comparison to the great crash of 1929. These are not my words. These are words from that time period somebody was quoting. Out of the $7 trillion decline in the stock market, $2 trillion disappeared in the capitalization of telecom companies. 112 telecom companies went bankrupt with liabilities exceeding $340 billion. The largest of them was WorldCom, close to 40 to somewhere between 40 to 50 billion in market cap was lost completely. Some of the other ones you probably heard about: Global Crossing, Adelphia, PSINet, 360 Networks, etc. I read some of the resumes. Some of you were from the telecom area?
Afraid so.
I know we have some of them here, so they can sort of equate to what actually happened over there. Fast forward, Cleantech. You saw some of the slides that I showed you before.
Oh, not again.
We hope not.
We're doing great back there.
Well, maybe. Let me just throw some things out for you guys. I've been saying this for the last 2 to 3 years to most of my audiences, but I'll repeat it again just so that it sticks, right? Energy is a highly competitive commodity, usually a low margin business, dominated by entrenched corporations and infrastructure. Okay? Based on that, it means that if you're trying to come up with a new technology, you have to make something that delivers the power cheaper. And usually to do that, it takes years of testing in very costly, large-scale demonstration plants. A utility or a power producer is not going to put new technology into their grid or network. This has to be demonstrated technology. It's also a very mature industry with incremental prospects for growth. This is not growing like the IT industry or the telecom industry at that time. It's not really growing at that rate. There's some differences. It also requires a significant amount of money, unlike the IT industry and some of the other ones like social media, for example, right? There's private investment, there's DOE loan guarantees that have been available. We're talking about billions of dollars that have been available. It takes time to commercialize, decades, not months, not years. Are we ready for that? That's another question that you have to think about. The last bullet here is a key one. I submit to you that the venture model, the venture capital model, as we currently know it, does not work for the clean tech. I think Rob said it earlier already. He said, name me one company that's been successful in the clean tech space that's venture backed. There have been a few exits, yes, but somebody that's really successful, I don't know of any. Especially if you look at the list that, other than the software-related energy companies or some of them that are still doing reasonably well. I'd also submit to you that a lot of the VCs, we have a few of them here, maybe we can ask them that question. They're losing their appetite for clean tech deals. Okay? This is the reality. It's been overhyped, like the telecom industry? Is it time for a bust right now? That's something that I want us to talk about. I wanted to just lay it out there as something that should we be looking at it from the eyes of the VC, venture capital, because this is what all of us, and sometimes startup companies are always thinking about. You know, they want to go to a VC and raise money from a VC, right? Just one last slide and then we can start discussion. In spite of all that stuff that I said, I still believe that there are significant opportunities that still remain in the clean tech space. Some of them are listed over here. If you remember, past the bust, the telecom industry did not go away. It's still a fairly large, very successful industry. Only the strongest survive, or were bought over and taken over by some of the larger companies. For the energy startups, the solution, and again, this is something that I'm offering to you, is not necessarily going the route of raising a significant amount of venture capital money, but really finding strategic partnerships. We talked briefly about this amongst the CEO Roundtable earlier in the discussion this afternoon of all the startup companies. It's going to the strategic partners, finding out who the strategic partners are, working with them, and getting them to help in providing capital. Those are the guys that can provide you with the business acumen, the finance, the market capabilities to enter the market, and also the engineering scale-up expertise. Okay? Leverage private-public partnerships, including funding. I talked about public-private partnerships in terms of what we do over here. And then there was also some of the large companies, partnering with the large companies, as well as some of the consortia that we talked about, that will help get industry off its stuff in the next few years. So the energy industry, like the telecom industry, is not going away. It's going to be around for long periods of time. There's going to be opportunities. The question is, how do we capture these opportunities and how do we move forward? So with that, any comments? This is basically just to our panelists.
First thing is, I was trying to figure out the meaning of the picture on the slide before that with the child.
Oh, me too.
Does that mean that was the one with the child trying to get to the gates of the pool? Does that mean we're still, as an industry, too small to drown ourselves?
I think that from a clean tech perspective, that's not far from the truth, is it?
Fair enough, fair enough.
Right? The clean tech industry, for sure. Comments?
Well, and I'll jump in just because you've thrown a little bit of gasoline on the fire. Let me throw a little bit additional on there. Just more food for thought. I realize I'm at a technology institution surrounded by technologists, and having just heard a bunch of startups predominantly based upon innovative technologies. I'll just throw out there a question right now. Is what's holding back more rapid adoption of clean technologies one more patent? I would suggest, and this is how we're largely investing, that yes, additional technological innovation is needed, but it is not the limiting factor at this point in the adoption cycle for many of the technologies we call clean technologies. That what is missing right now is the market reinvention, the appropriate channels, and the execution.
And one more factor, perceived need.
But when the IT industry started approaching large companies, large enterprises, there also wasn't the perceived need. There wasn't an IT department, right? There wasn't somebody who was dedicated to trying to figure out, which enterprise software program they should be bringing on board. That's the role of an appropriate, ambitious, energetic, entrepreneurial channel. We have yet to see the VARs in clean tech. And until we have VARs in clean tech, a lot of great innovations are going screaming right into a brick wall and not being adopted.
I think part of the issue goes to where we are in a global sense. Governor Cuomo said that Superstorm Sandy was a 100-year storm, except that it was occurring every 2 years. And I think think that is going to be, when we look back on it, a major impetus to clean technologies in our country and in our world. The other thing is in the area of, if I can expand clean tech beyond energy into water. Water is probably the single most pressing problem in much of the world outside of the U.S. and even in parts of the U.S. And I think if we include water and we include taking a look at what happened with Sandy and what that means for us, whether you're talking to the utilities who were early adopters of IT, they're now saying, we have to do something different because we're going to lose our job if we don't. So I think we're at a crossroads.
Jeff, go ahead. I can use, it can be.
Not to go just one after another here, but
I'll move.
I'd like to believe what you're saying is true, but to go back to what Rob's saying, I mean, I think we might need, unfortunately, another 6 or 12 or something Sandys for people to really, for it to sink in. I mean, directionally, what you're saying is true, I think, and these things will have an impact. But the real hard work is to be done at the level of, sort of behavior change, process change, finance structures, whatever. There's a whole lot of blocking and tackling work that needs to be done to create a pathway for adoption of these technologies. I also don't think that, I'll circle back to this in a minute, but Pradeep, you said this is an industry that's growing incrementally. Well, that's true, but incrementally on a really large base, okay? And the real growth is going to come if we look at the energy production side, not just from the growth in energy consumption worldwide, which is happening, but, the replacement of dirty technologies with clean technologies. But back to this point, my God, we have, hundreds of years of investment in the infrastructure, the business models and whatnot for extraction, processing, consumption of those existing technologies. It's not going to change overnight, but so I very much agree with Rob. The gating factors are more around those kind of market forces and whatnot. One last point on this, it related to the sort of venture thing. I have no right talking about this, and I listen to people like Rob on this, but I suspect what we're going to see is more of what you're trying to do, which is the hybrid stuff, how do different players in the investment ecosystem partner with one another to actually build the balance sheets, the pathways to launching these companies successfully. I think in retrospect, it probably shouldn't be so surprising that we've had these really big failures around companies that just tried to, in a cookie cutter way, apply the venture model that works for IT to this. We saw different financing structures develop for biotech companies, which can be more capital intensive, for instance. We're going to see new stuff in the clean tech space as well, I believe.
Yeah, without disagreeing with any of that, I think another frontier may be in re-articulating and reimagining the value propositions behind clean technologies. Pradeep, you were talking about how a lot of these technologies were aimed at commodities. Electrons are commodities, right? BTUs, and they're aimed at commodities, and maybe that's not the value proposition to look for. When Governor Cuomo responded with the establishment of three important panels yesterday to look at what New York State can do in the aftermath of Sandy, it was all around resiliency, right? It wasn't about, is climate change man-made and therefore we need to have some sort of carbon pricing. It was about, look, these storms happen, we need to upgrade our infrastructure, we need to be smarter about that. And maybe the less difficult the price of electrons or the price of fuel, and offer some value that way. So I think it's a matter of reframing what these technologies can truly offer.
So I have one more question. One of the learnings that we got from sort of, and that's just an example that I took out of the book, the telecommunications bust. You know, one of the and there's some similarities. Not everything is the same. One of the learnings from that was a lot of the people that were the early adapters, if you will, or the ones that were upfront in pushing the technology, if you will, implementing the infrastructure. They're the ones that went bankrupt, but the people that came later on and picked up on the remains are the ones that made out really, really, really well when they came up and used some of the new business models. I mean, so is that from lessons learned to a lot of our new guys that are looking at starting and trying to invest and do new technologies, introduce new technologies? What is the message for them?
I think the
Be second, right? Is that a good enough answer?
The telecoms issue was very different than the Cleantech issue. A lot of the telecom investment and the startup were started because there was a major corporation putting out false financial statements. And everybody looking at the financial statements was saying, oh, look at these guys, they're growing so rapidly, so we better invest. And that's what drove a lot of that money into that thing. Once that company collapsed, it was Broadcom, we all know now, so they ended up in jail. So once that collapsed, then of course the whole industry collapsed with it, and all the equipment manufacturers collapsed with it. So I don't think the Cleantech is going in that direction. I think the Cleantech, what I hear and what I see is a lot of people are trying to make incremental improvements over what's already existing. And generally speaking, those are easier to implement than radical changes. So I think Cleantech has a brighter scope, and it's not a comparison we should make with telecom, because telecom is a fraud. It really was. It really was. The WorldCom was they were all indicted, so they were all in jail. But they were putting up financial statements that were fraud.
And that's not the case in the.
No, not.
Okay.
It wasn't the case in Enron.
Yes.
Yeah, right.
Far as you know, that's not happening.
Yeah, as representing a venture fund that's boldly going into this space, I have maybe some slightly different thoughts. And one is, I think the Cleantech business model is maturing. And so some of the thoughts I would have about that is, as an investor, look at M&A as your exit instead of IPO. And I think one of the things, I didn't have a chance to remember all the details there, but a lot of these companies were launched with an IPO in mind and to get highest valuation. And if you look at Cleantech from an M&A exit, you invest from that point of view, and you look at your time horizons, this is actually kind of a very attractive sector, because the fundamentals about Cleantech are very fundamental business issues: energy efficiency, business efficiency, efficiency of use of materials. There's huge amounts of cash on the balance sheets of potential acquiring companies, and the long-term fundamental drivers of the sector are not changing in terms of energy use, energy consumption, restriction on natural resources, commodity pricing, and array of things that other people have said better than I just did. So part of another aspect of the business model that's maturing and emerging, and as implied in some of the things you said here, is the importance of companies in this space to have partnerships with established players, because it does take perhaps, it's not that, I don't think it necessarily takes longer for the companies to grow to scale, but it would if they try to do everything under their own roof. And I think a lot of these examples were cases of that. And just to dial back to that IPO issue a second, tremendous amounts of money were lost on Facebook. We shouldn't overlook that fact. People who bought Facebook when it went public and then saw it decline, if you multiply the total amount of losses in Facebook, it's nothing to get excited about. And so
it's a few cylinders.
Yes, there we go. There we go. And just perhaps one more thought at this moment. The word Cleantech, there's even a sense of starting to move away from the word clean tech. I was at the National Renewable Energy Lab forum a few weeks ago, and there was more than one speaker talking about moving beyond the word clean tech. And one of the challenges is that clean tech is probably one of the broadest descriptors for a quote industry sector that may has ever existed. If you look at all the things we like to put under that umbrella, they may have some common elements in terms of fundamental issues about efficiency and resource utilization and things like that. But this is an incredibly diverse industry. So if you then start to look within that and look for companies that have you use the word transformative or that were fundamentally transformative. Well, what is fundamentally transformative? At some point, you can translate that into metrics. If a company has a device that generates energy efficiency that has a payback in less than 2 years, you're going to get a lot of attention. If you have one that has a payback of 15 years, a lot of problems with that. So, if you have clear business models and that have economic metrics and an ability to create strategic partnerships, and as an investor, look at realistic expectations for exits and structure your investment valuation and activities around the huge pool of money that's out there in potential acquirers, and then look at the IPO as the gravy, as opposed to have a very attractive and exciting sector, and one that's and it's exciting to move in when a vacuum is created by other people exiting.
I don't see the audience asking any questions. Steve, yes, go ahead.
Somebody's got to start. So we're
Speak
talking
up a
about
little louder
transform.
because.
Is this loud enough?
Yeah.
Talking about transformative, transforming the markets, let's talk about renewable energy. So everything I've heard so far is everybody's sticking to the same model. We have big power companies, and we're gonna, whatever our new technology is, somehow gonna fit into that power company, and I'm gonna get my stuff off the grid and pay them, and I'm gonna have, there's this huge capital involved in doing that. What about a transformative technology that takes energy away from the power companies? Now I have my own energy. There's no, is that the 11th commandment that says you got to get your energy from the power company? No. So there's a technology out there. So it's like technology.
Let me stop you there. That's where I was going to stop you, right? Because I don't think that there's a technology out there answer. I think that is a great point. It's what Mike was getting to. He was talking about the resiliency question. And look, I mean, I have a presentation from Bob Shaw on my side desk at work that talks about how transformative distributed generation is going to be. I've got a report from WorldWatch that's, again, right next to it that talks about how transformative distributed generation is going to be. Those reports are over a decade old now, right? They were all talking about how over the next 2 years we're going to see and this was back in the last wave of talking about, capstone and microturbines and fuel cells, and which was going to win? Was it going to be the microturbine or the fuel cell, right? Amen on the idea of we need to break up the idea of natural monopolies with hub and spoke distribution systems for electrons. Yes. But I fundamentally at this point do not believe that what's holding us back from that is technology. We have solar that is distributed generation. We have a variety of CHP solutions that are distributed generation, right? We have a whole realm of things that would make a lot of sense that would provide already the 2-year payback period in many cases if you broaden your thinking to thinking about controlling the loads inside your facility that people aren't doing. I have a company, they recently offered an industrial customer a 6-month payback period on load control software. It took that customer 9 months to say yes.
It's the capital expenditures and the lack of.
9 months? It's not a capital expenditure problem if it's 9-month payback period.
The reason why people are not implementing it, I believe, is the lack of capital within companies or the lack
Companies
of.
are awash with capital right now. Bain just put out a report talking about we are entering an era of capital superabundance.
I just read an article about a 262-unit co-op in Lower Manhattan that had all their lights on, all their electric power on throughout the downtime and the rest of Lower Manhattan.
Because they had a
The storm
CHP
went
system in
through
them.
Because they had CHP, they took in all their neighbors from surrounding buildings. There are companies, nursing homes, and hospitals
huge caveat on that, because you raised, look, this is a great example, and in that particular case, when you're talking about multifamily buildings, or you're talking about large shared tenant office buildings and stuff like that, the capital issue absolutely comes up. But the devil's in the details is, I guess, my message, right? And it's gonna be subsector by subsector, application by application, what are the specific obstacles? Because in that particular example, when you're talking about multifamily dwellings, or you're talking about shared office space across multiple tenants, the challenge is that it's an agent buyer problem, right? The challenge is that the people who are being asked to spend the CapEx aren't gonna enjoy the savings from the CapEx in most cases.
Well,
That's problem
there are
number one.
those instances.
Problem number two is lack of awareness, being flooded with opportunity. Again, I go back to the fact that we are dealing with 100-year-old channels, 100-year-old incumbents, none of which are very amenable to change. I've spent a few years now trying to find somebody who would be a competent ESCO, energy savings company, focused on the CNI space. I've yet to find one, right? We lack good channels to be able to go to somebody neighboring that building you just described and say, did you see that? Why don't you do that? And we'll solve that problem. We'll be your single throat to choke. We will arrange the financing if you need financing, but we'll also make it where if you do have a fat, cash balance right now, like most large corporations do, you can do that instead and not give up margin to somebody, right? We'll make sure that you have total assurance that the project will be completely installed correctly. We'll make sure that we help you get assurance that you are selecting the right technology, that you're future-proofed, that you're not, boxing yourself into something where in 2 years you're going to be looking like an idiot because you didn't choose the bloom box, right, or whatever the case may be, right? But that's the role of an appropriate channel, and that's what's missing. It's not the financing. There's plenty of capital.
One at a time.
You wanted participation.
Yes, absolutely. I love this. This is great. You had your hand up first. Go ahead.
Jeff,
Yeah.
I'm not sure that it's that the culture doesn't know it. I think that they don't trust it is more of the issue.
Yes.
And I think that the industry itself is a little bit at fault for that. I think, I've been talking to a lot of clients, and you have one type of vendor saying, don't use this because this is wrong with it. You have another one saying, don't use this is what's wrong with it. And there's just a lack of trust. I think that's the biggest problem.
You're exactly right.
No standardization.
Correct.
No standardization, no proof of actual long-term database of what
So
actually
there's no
works.
comfort to do the capital expenditure he wants. Because of that, there's no trust. The other thing, just going back to a comment of yours, the cylinders and everything else, I think that the model might be changing. I think that what you guys have done here, where you have a public entity that's kind of a trust for the DOE money and working with the private companies like Magnolia and stuff to grow, I think that people, and DOE already recognizes the value of that because obviously all the money, you guys got the biggest share. So I think that might, when that change does occur and come to fruition, I think that you'll have a lot less of a possibility of worrying about the telecom boom, bust and everything else. And I think that the money will find its way where it has to when there's a little bit, again, coming with the comfort that there's just not being bad money thrown at a bad item, and we should follow that.
I didn't pay him to say this, but I'll take all the money that you guys have to recreate.
You don't need to pay me, you say it enough.
Yeah, I'd say, I think we're starting to touch on some of the fundamentals. I think back, talk the telecom example. How long did it take before people left Ma Bell? There were lots of highly economical alternatives. But you were asking people to start delving into areas they have never dealt with before. And now asking people to start taking responsibility for their energy. That's a big responsibility. In many instances, that's a big risk. I was involved in some CHP analyses, this goes back quite a number of years, with hotels and hospitals. And in every case, the economics was stunningly attractive to do the installations. In every case of the hotels, they all said, we won't take that risk. If we have a major client who's doing a presentation, doing work in his room, and our power goes out, we can't afford him to blame us. We'd rather do nothing and have him blame the utility. So there's a lot of acceptance issues, and we're doing a lousy job educating.
So what people are describing is a collective action problem that's compounded by a collective ignorance problem that's compounded by a collective lack of trust problem.
And SKU price version.
Yes. Go ahead.
I ran one of the early interconnect telephone companies that went public, and we did very, very well. And we were able to succeed, this was in the 70s, late 70s. We were able to succeed because we took a look at the problems you're identifying, and your point about a bar, that's what we were. First thing we did was we went to insurance companies and we said we need bonding to guarantee uptime of our systems. Next, we priced service contracts so that they would be friendly. And next, we had such a compelling economic story to tell that you couldn't say no. So we rapidly moved into all the money center banks in New York City adopting our technology.
This is a great example of what I was talking about with the devils and the details, because you had to get into that industry, know what people cared about in terms of the risks, go out there and solidify your contractual relationships up and down the value chain to satisfy those risks and be able to stand up there and satisfy the trust
We
issue.
don't have that in Cleantech.
Yes, we do. That's what I was going to say. Let me give you a ray of hope, because there is a stunning success story underway in one particular part of Cleantech right now where this is being solved. Residential rooftop solar. Right? This is the fastest growing market in the United States. I'm not talking about Cleantech markets. This is the fastest growing market in the United States right now, full stop, across all industries. And why is it working? It's working because that is what has now been fixed. Right? It has now been figured out that, okay, if I'm going to be installing solar, first of all, it's exactly the same sort of telecom, dark fiber, or I'll go back to the 1800s. The railroads, you know, how more miles of railroad were put in place after the railroad stock bust, right? Those kind of things, like you said a couple of minutes ago, have been repeated in all sorts of industries ad nauseum. Well, the collapse of the solar manufacturing industry is resulting in a significant drop in solar panel pricing. And by the way, although it's less heralded, a corresponding drop in balance of system pricing throughout much of the value chain. And even the solar financing players are getting real good at dropping now the cost of capital and dropping the cost of installation and even dropping the cost of customer acquisition. So that we're seeing a rapid fall in the absolute full stack cost of energy produced by solar through installing it on your roof in certain territories. They're also getting really good at the contracting of it, so that they're able to take those risks and offset them to upstream, downstream, all the players who will be able to be there with a balance sheet and a brand and a reputation, so that when you put that solar panel on your roof, it's not Joe Bob and his truck who installed it and you're like, I hope Joe Bob's going to be there next year. But instead, it's, you know, a company like Sharp or somebody with a big brand name that's going to be able to stand up there and back it. The other thing, though, that's been very critical in seeing all of that take place is that trust factor, and you just mentioned the tipping point, right? Now that we're starting to see enough of this get out there in the neighborhoods, we're starting to be able to see some pretty cool patterns, which is essentially that it's infectious. When people in the neighborhood see solar on their neighbor's roof, then they start to think, okay, well, maybe it's okay. And maybe they even ask the neighbor about it. And what they find is a real clustering effect. This is the tipping point that's happening in residential rooftop solar.
That's happening
It
because
needs to
of
be
the-
happening in some of the other areas as well.
That's also driven by the fact that they're all now connected to grids too.
They're connected to the grid, but they don't necessarily.
That's where the failure goes away, that this failure risk goes away. That's the important piece that most states have now put in, is grid connectivity as between laws and so on in place. And that's what's happening.
There's a question back here. For a long period of time, you had your hand up. Les, go ahead.
You know what, there's two issues here. One is something I call the Godot factor, which is something that we've done to ourselves. What's coming tomorrow? These industries have moved so quickly, and the technologies have advanced at such a pace, people are sitting back. What's going to happen tomorrow? What am I going to miss out on? Am I going to get 4D TV tomorrow? The other factor is, I think, the incentives that states and municipalities have been offering to residential and commercial people. States have incentives, then they don't have incentives. Well, we're going to do it this week, but we're not going to do it after December 12th. And I think the confusion and the fact of what's coming tomorrow is really slowing down the marketplace.
Yes, Richard.
You know,
fundamental question, I think. And it comes back to the idea of energy as a commodity. Energy is a very cheap commodity. It's been cheap for a long time. Fossil fuel being the primary production of it. And it's the bar, these companies have failed. Maybe the bar was always too high. Maybe it's simply not possible currently with alternative energy production to do it at the cost of these existing technologies. And which brings, other technological revolutions that we've seen, Cleantech is one now, they're bringing something new. The railroads were new. They provided new resources, new things. The phones were new. Internet, the IT is new. Energy is not new. It's been around forever. You're asking new companies to produce energy in a way that's been done already very successfully. So ultimately, is the bar too high? And ultimately, in order to bring the bar down for clean energy generating technologies, do you think there's going to need to be some kind of basically a carbon tax? And that's a political as well as a geopolitical question. Because I think ultimately that's the only thing. If we had that, then the money would flow. Because you see that it's not possible to compete with coal, gas. And just as it seemed like we had the peak oil coming to the rescue of the clean energy generators, then we have the fracking, which is bring huge quantities of cheap gas.
So let's answer that question. Is carbon tax needed to make Cleantech worthwhile? That's sort of the question, right? Is that what do the panelists think?
I think not.
Rob?
Is it needed to make it worth it? It's important how you ask the question. Do we need it? Yes. I actually agree with what you're saying, but I think, to go back to the comment that Mark made about how broad this sector is defined as, I think there are plenty of areas within the clean tech umbrella where you can find compelling payback periods, even within that high bar.
Okay, well, yes,
Without an energy tax.
Yeah, but
I agree with that.
But do we need an energy tax, or more precisely a carbon tax? Lord knows we don't want to tax.
Well, there's also the reason I asked the question. There's a recent saying that if your business plan requires you to go to Congress to change something, it's a lousy business plan.
It's a different question for different audiences and for different.
This is one thing we know Congress isn't going to change.
Right.
Yeah.
That's kind of my point. I think what everyone's saying is sort of true, but the truth is, from my perspective, is that the market is there for the technology, for the products, but we have to. We can't sell technology. We have to sell products, and part of the problem here is that we're all technologists, and we're trying to sell technology. We need to sell a product. We need to package it and selling it. There's technology behind the product, but there's also methods and processes. And a very easy prime example is the iPad. It's Apple. They did not invent the MP3 player. They did not invent touchscreen computing. They did not invent the smartphone. That stuff was there. But they figured out how to turn it into a product. And they did a great job doing that, and people bought it. And I think everyone here would go buy solar for their home tomorrow if it was presented as a slam dunk to them in some way. That's the whole problem. It's a business problem, and most people in technology aren't looking at that seriously enough because we all love technology. And we need to fall out of love with our technology a little bit and into love with why anyone should care. When we do that, we're going to have a home run.
Just kind of maybe to pick up on a few points, but I just lived through Sandy. And so I had home and office during cold weather with no heat, no power, no internet, no mobile phone, this whole domino effect. And we were talking about distributed energy and distributed generation and resiliency and everything. I can tell you that, in a certain respect, we already have distributed generation, because one of the things that surprised me was during the blackout how many generators there were. I mean, you could walk around at night, you could hear generators. But I was completely surprised how many people had gone out and bought generators. And the first thing I did the day after was get my generator out. I said, I haven't turned this on for 10 years. I got it going. I ran around to hardware stores, got every extension cord I could, wired up everything, got my battery backups hooked up to the modems. So I built a microgrid. That was the first thing I did. And then, of course, the next day we ran out of gasoline. So much for plan. So there was on the plan C by then. But my point is that there's a we already have distributed generation at the first level. It's just very fragmented. We had someone mention CHP. We have gasoline generators. I was, as I mentioned, totally surprised at how many there were because I could hear them going all night.
Where do you live?
I live in Westchester. So 75% of the power lines on my street were snapped or taken down, wires everywhere. And this was just normal. I mean, where I was, and I have friends, we weren't near the water, but I had a lot of friends who have damaged their homes, some lost their homes, some people who escaped literally with their lives and fires and all the rest of it. So a lot of people had a lot worse. But just speaking for myself, in the last 30 months, on 2 occasions, I've had storm-related blackouts of 5 days or longer during cold weather. So I can tell you that I think that one of the takeaways from Sandy is distributed generation. And I know that there's a...
You're supporting what I said earlier.
Well, there are a lot of different comments, so I'm supporting a lot of things.
Are you running for office?
My point is that I think that I know there's a section of geography, and I'm saying all this because I live in an area outside of New York City. It's supposed to be one of the most developed places in the whole planet. And so I can tell you that there is a lot of hunger for distributed generation, and I hope you speak your Rob, your point about business models and all these things. I think that it's really right. But I also want to change the perception a little bit and say that distributed generation is already out there. It's just hugely fragmented, not integrated, and not really seen that way. And I think if there's one takeaway from Sandy, it's distributed
If it's
generation.
provided as a solution, the demand is there.
But the problem with that is that unless you have also storage, right now most of the distributed generation with solar panels doesn't have any storage in it.
Right.
So if the grid goes, then you're also dead anyway. So it's no
Energy
point.
storage is one of our...
Well, that's why,
gas
I mean, a lot of the studies, I mean, there's a McKinsey study out recently that actually talks about how distributed generation type products are going to actually get developed first in the developing world, just like how, cell phones leapfrogged over what happened in the developed country already, primarily because they did not have that infrastructure to begin with, so they were going to invest and put something in. Why not put in something that makes more sense, which is distributed generation moving forward? And so that's why some of these countries, China and India and Africa and South America, are investing heavily in
Long Island.
Once Long Island Power Authority goes away, that's for sure. That's definitely happening. But yeah, so I mean, so those opportunities exist already. Yes, there's a question way back there, Adam. Go ahead.
Yeah, so I wanted to
Speak up a little louder.
I wanted to ask a bit about that storage problem. So it seems that the cost of lithium-ion batteries in a lot of energy storage solutions still are cost prohibitive. Things like solar, wind, they have a fundamental problem with intermittency. So at what point do you think that, or do you see any ways of overcoming with current technology limitations of energy storage and current financing options?
Well, first thing I'll say is, I made a grand blanket statement around we don't need another new patent. I actually think there are certainly some exceptions to it, and one of them I think is in grid scale or even small scale energy storage. So that's an area where I'm seeing a lot of technological innovation that I think is necessary to get down to price points where stuff would start to make sense in this kind of context. That said, though, absolutely what I'm very intrigued by is seeing a wave of folks who are, again, taking a solution package approach to thinking about that very problem. And the answer isn't, okay, I've got some lithium-ion batteries, here you go. Or I've got some lithium-ion batteries, I stick them in a box, here you go. Right? But instead saying, okay, let me tell you an example of a really cool company I've seen where they want to basically solve the energy problem for an entire big building, but they go through the roof, right? It's to your point. This company will go to, let's say, like a DuPont headquarters building and say, hey, you know how people have been offering you solar in your roof for a certain price per kilowatt hour? We'll do the same thing, but we'll charge you a couple of pennies less per kilowatt hour. This company doesn't have any special advantage on the cost side. They're just taking a wash on the margin because they're treating it almost as a loss leader. Because they know once they get you to put solar on the roof of that building, then they go back to the building owner and say, but by the way, you realize your demand charge it's gonna be the same every month, because there's gonna be some 15-minute billing period when you're at peak demand and the clouds go over and you don't get your solar power, right? So, but hey, I can fix that for you, right? I can fix that for you because I can start to control some of the loads inside the building. Well, now that I've started controlling some of the loads inside the building, hey, why don't we do some of that so that you don't have to dim the lights, you don't have to turn up the thermostat by installing some solar in there as well, and take advantage of the fact when you make excess power off of your solar panel. Well, as long as we're doing that, why don't I take care of actually getting you integrated into a demand response program and an ancillary services program with your utility so that you can start to generate revenue from all of this by selling power back to the grid, or selling just capacity back to the grid when it's necessary. So they start to the roof with a totally non-technical answer. Then they integrate into a full building solution that requires technology and controls and will be there to take advantage of those breakthroughs on the energy storage side. That stuff's pretty interesting.
And you might be able to do that with lead acid.
Exactly. It might not.
So
Yeah, but there
you might
is-
be able to utilize that.
Right,
lead
that's
acid.
Whatever's the right solution.
Enron is trying to do that already. They've sort of been fairly successful in doing that. Why hasn't that taken off though?
In Enron's case, or
In general. In general. Well, and not too.
Right. Everybody will have their opinions as to why it hasn't taken off, but I think part of it is awareness. I'll use it as a touch point to just make one point about the carbon tax thing, which is, remember how I said we need it, right? I totally agree with you. If your business plan says you need to see Congress write a law in order for everything to make economic sense, that's not something I'm going to invest in. But let me tell you where a carbon tax would actually be hugely helpful, just raising awareness. If you go back and you look at other environmental policies that have been passed in the United States and their impact on business, all sorts of kerfuffles, all sorts of concerns around, oh, this is going to be so costly. But by the time it got fully broadcast as to, okay, well, this is how it's going to roll out, it's pretty inevitable, the regulations are going to start kicking in, companies, individuals got a head start in terms of starting to figure it out, it started prompting innovation, and it became a lot less costly. There's an absolute power to the information of having signaled something, right? Think about the Montreal Protocol and what that signaled to DuPont, so that at the end, DuPont was one of the biggest cheerleaders saying, yes, let's ban CFCs, right? So if we were to say, for instance, we're going to have $100 per ton carbon tax in 2050. And it's going to phase in gradually over time, and not in a linear fashion either. It's going to start out being only a penny for the first decade of it. So everybody's got plenty of time to make their adjustments. I mean, if you think about it over a decade, and then in the second decade, it's only going to be, 10 cents, right? Then it really starts ratcheting up. Think about the signal that would send to the marketplace.
Ready for office, right?
not on a carbon tax plan.
I think my investment horizon is a lot shorter than that.
Your investment horizon is a lot shorter, but the purchasing horizon is also a lot shorter. So simply having that in place, codifying, hey, look at guys, this is the way the market's moving, that'll start to prompt purchasing behavior that makes sense even with current pricing.
And the response is that the tax is not the only thing.
Go ahead. You had your hand up for a while. Go ahead.
But on that point, it's carbon taxes is your only option out in the market.
Right.
Could be as well, but carbon taxes are more effective in raising awareness than in the way that you said. But also, I'd like to make a point about the project you said you had.
Could you speak up, please? Speak up a little louder.
Took 9 months for the contract to be signed.
Right.
One of the things you have is that, many of our technologies are too expensive. Price per kilowatt hour was around 14 cents, right? Since then, in 2008, it was down to 8 cents, 9 cents. And until we have economic expansion and we tighten the grid again and the price of electricity goes up, we're stuck in this gap.
Same with oil, right?
Right. And so it's not only a question of, can we be cheaper? Can we be, yeah, it has to be cheaper. That's what you really want. You want the product, you want the energy. But it's also, it's not as compelling when you're only saving 2 cents, right? Because what your company's product is saving, balancing your loads and so forth, efficiency in your operations.
Sure.
If you're saving 6 cents, it's a lot more compelling, and you probably had it signed a lot faster than 9 months. So it's a problem, another structural problem we have in the energy market, challenging clean technology adoption.
another patent that radically alters the economics of some proposition is gonna, it's certainly gonna help raise awareness about what's possible.
A transformative development, not just a
Incremental.
incremental.
Incremental improvements are, you know, is
A dime a dozen.
death by 1,000 cuts in this sector. It's what's creating the investor fatigue and skepticism and whatnot, in part. I know you're a little, I think, maybe contrarian on this, but.
Well, no, I don't think we're actually that far apart. I mean, my
Yeah.
answer was an answer for right at this moment.
Yeah.
And my thinking on it is that these things go in cycles. They go in technical innovation and then adoption cycles. And there is a lag time, right? You create, I think over the past couple of decades, some really compelling technological innovations that are still being digested by a market that has to figure out how to buy and sell and use them effectively, right? When that starts to happen, the pendulum will swing back and people will be like, well, wait a minute, okay, great. Now that I have a platform for being able to use the next wave of, radical innovations, yeah, bring that. So these things, I hope people aren't thinking that I'm saying, yeah, you technologists, your day is done, right? But what I am using it is as a caution for the technologists who are early stage entrepreneurs right now, saying you got to think that long-term perspective about how you're going to fit into that longer-term next wave.
But on the energy production side, at least, if you're competing against fossil fuels, which is what everybody's competing against, the bar is just so incredibly high right now. So we've got a bunch of people pursuing, an incrementally, better sort of energy production technology, all the while, so they leapfrog substantially over an incumbent clean tech technology. But where what they have to be able to do is jump over a tall building in a single bound. Of course, this stuff is, people are tired of funding this stuff.
That was my picture. Mike, you want to say a few things?
Yeah, well, I actually really just had a question. We were talking about truly transformative technology. If it's truly transformative technology, can you still venture fund that?
Right.
Can you still, with a lot of visibility into what it's going to take to get to the market, is that still venture fundable? Can you really go beyond the strategic partner route?
You're supposed to answer questions, not.
No, that's good. It is the question of the moment, isn't it?
Yes, that's relevant.
How would you answer it, Mike?
I think you need serious capital, but I think certainly you need a lot of visibility into what it's going to take to fully deploy, right? And what all those capital costs in the future are going to be. Not easy for a startup company to.
But that's also not a VC model, though.
Isn't it? Well, I would disagree. I think pharma is a precedent, right? I mean, guys had to place $100 million bets on a maybe $1 billion a year.
So where's the phase 2 trial in Cleantech?
Yeah, that's the problem. You don't have those.
Well, and you did, but I love your point about future-proof. Those VCs that had the guts to do pharma had no future-proofing either. By the time they got through the FDA, Pfizer had a better one, right?
Right.
So I think there is a precedent, but it's a rarefied group of venture guys that will write that many checks for that long for the be-all and end-all $1 billion a year blockbuster drug.
Well, I think you also have, some of the venture guys who have, of course, colossal funds, right? They can't put small amounts of money in,
Right.
but they also can't put small amounts of money.
Well, they want future-proofing also.
And to make a difference in their fund, they've got to have course.
Well, to be fair to the folks who aren't here who are espousing the black swan investment thesis, like Linode, Bill Gates has gone out there and said the same stuff about, hey, forget about this incremental market improvement. We just need something that's going to blow the status quo out of the water innovatively. Right. And look, I got into this because I'm a guy who cares about these issues, who found himself as an investor. I'm not an investor who stumbled into this sector. It's the other way around, right? So I sure as hell would love to see that, right? What I've learned is to be very wary about all of the other parts about that. I actually think, maybe I'm over optimistic, but I think there are people, perhaps even in this very room, but certainly people out there in labs who are working on exactly those kind of things. My great fear is that they're going to get trapped into a venture capital vortex that means that those innovations don't get brought to market. Or my lesser fear, because it's not a victimless crime, but at least some good comes out of it, is that those innovations will be brought to market, crater financially, and then get picked up and used later, like what's happening in solar right now, right? So that's a tragedy for the LPs of the venture capital funds, but it's not a tragedy for society. And I think that's the cycle we just went through.
You have a question here.
Yes. By the way, I just went to the Westchester Sandy, and what I did was I pulled my solar garden lights out into my house at night. And I went to my organic garden, and I pulled fresh greens
Energy
out.
storage in those lights.
All day. And then I told my neighbors and all the people I was helping because I felt a little blessed with that. And so now everybody's buying solar garden lights as backup.
So once again, we're sending all of our money to Cleantech innovators in Southeast China.
Right. But the question I have for you, because I'm a filmmaker and a producer, and I'm passionate about teaching our culture about overcoming the mistrust and the ignorance and the doubt they have about this emerging, it's not emerging, it's here, it's right now, and it's so available, and educating them so that they're excited and they get it and they want to participate in their part of getting these messages out there. Just like Inconvenient Truth and Forks Over Knives, or Colin Campbell's study on the China study, is just transforming our public. I am dedicated to doing that. So I'm curious about what you think some of those messages might look like, so I could help in any way, because I love what you do.
What is the key message for outreach to the public, right?
I have a bit of an off-the-wall, kind of thought about that, but not so off-the-wall. Pradeep mentioned I taught for a while, and I taught in the negotiation area, which draws a lot from social psychology. And we saw that we saw the Obama campaign recently, get all these social psychologists and whatnot as consultants.
Did he win?
I heard. But he had some help, it sounds like, from from a different sort of researchers who understand what messages work and how to tap into the psychology. And actually, one of these ideas was mentioned by Rob and by I was also thinking of Ness, the thermostat company. As you see panels on roofs, as you walk into a room and you see this cool, funky new thermostat and whatnot. One of these principles is persuasion principles is called social proof. We tend to trust things that are validated by others. And so there's a great book by a guy named Robert Cialdini who studies this stuff called The Power of, I don't know, whatever, persuasion or something. And he winds up all these principles that the Obama campaign used. And maybe our companies need to think about, this in their marketing. How do we, there is a way you can block and tackle in the, kind of marketing and sales process around this, to craft powerful messages. So.
Robin, go ahead.
So, everybody in this room has something to gain from Cleantech working out. And I think we all see the social benefit from it. And we all talk about the innovation that's happening in the area, the technology is here. But innovation is also happening in other forms of energy technology. We're seeing fracking, for instance, happen all over the United States because of changes in that technology. Now, why, as investors, are you interested in this type of technology over a technology that, well, we all see reasons why it can cause problems, but there's money to be made there. Why this, not that?
Mark? Oh, that had my name.
That's for you. Here, sorry.
I was going to talk about energy storage.
There's a lot of it, it's called shale.
Yeah. Other people who are more knowledgeable about the oil and gas industry have talked about that and have confronted the clean tech industry on the same issue about, isn't gas a better alternative? Isn't it better to have an economy that's run on natural gas than on coal and oil, just from a clean point of view and a social point of view? And that argument can be made, and then from on the clean tech side or the solar side or the wind side, you say, well, geez, that makes the bar harder to scale. So I think I'm going to refrain from a direct opinion about fracking, but since this clean tech umbrella is so big, we can cover a lot of things with it. The kind of the clean tech opportunity within fracking is about water, because it uses, first of all, tremendous amounts of water, and hauling the wastewater in and out is very energy intensive, destroys the roads and all these other kinds of problems. It creates pollution. So some of the interesting things that are happening under the traditional clean tech umbrella are looking at water and looking at the, if you take fracking as a given, because it is, as you pointed out, many places, then does the cost of cleaning up the fracking water provide an early adopter opportunity for water technologies? And one of the ongoing issues about business models within clean tech is, who are your early adopters? How do you get to scale, and how do you do that? So I know a number of companies that while maybe it's depending which side of the spectrum you're on, it's maybe a little bit of an uneasy partnership. But if they say, well, it's happening anyway, and it's creating pollution, creating all these problems, and we have a technology that can solve that, and that helps us get to scale, and then we can solve bigger, more important problems, like I happen to know one company that originally got funded about cleaning up the oil spill, the BP oil spill, and now they're looking at fracking water as the early adopter scale-up technology, and then in other areas. And people have been talking about water as a opportunity area for a long time, and I think we're just getting to the point of seeing what does that mean. And this kind of ties into one of the points I've been thinking about and making earlier, and I'm going to make a segue to energy storage. In that we talk about these markets in these global senses, and the reality is that they are very differentiated. They're really consist of multiple market segments, and so we talk about water, and we have produced water from fracking. We have desalination. There's global needs for fresh water. There's wastewater. There's the functioning of creating intelligent networks for managing municipal water systems. I know one company that has a payback of less than a year for municipal water systems just by installing intelligence into their water network. And I think, segue coming here, that in energy storage is, and then going back to the earlier question, is kind of a similar issue. This ties back, Pradeep, to your slide where you had the companies up there. I don't presume to know everything about A123, but I do know that early on their public persona was they had a technology solution that was global in its application. So A123 has grid batteries that are installed, or were, I don't know if they're still operating. They were targeting the electric vehicle market, which didn't grow as quickly, and other things. And I think one of the things we're seeing with energy storage is that it's a highly differentiated market. And I believe we're going to be seeing in the next couple of years some major rollouts in grid storage, but even grid storage is a very fragmented market. There are needs for wind and solar have specific needs for certain types of grid storage. Utilities have different types of needs for balancing the grid. Substations have other needs, and the local user, whether it's in distributed generation or that even the homeowner has a third type of need. So fifth type of need, whatever. I'm not counting. So I think both across the board in clean tech, there's been a historical kind of obfuscation of the different markets and the different requirements they have, and that's my answer about fracking.
So, grid storage, great segue. Anybody watch last night National Geographic
trying to deploy them into India. They should be in a green box like CNS is doing, and that is deploying them next to homes, gas stations. You talk about not being able to get gas during Sandy. These things should be deployed on tractor-trailer trucks, dropped off, and be provided to fuel stations so that, in fact, they could fuel cars. Now, NYSERDA comes in. They don't finance or don't support with incentives storage. So whether it's a 50,000 watt system for an office structure or building or a 5,000 watts for a home, this would be a great place to start deploying. Now, the cost and how to implement. Does GE, who's a big company, JP Morgan family back in those days, but the issue is they could be leasing those systems. So if there's an incentive that can get the GE to drive down that cost, there's a little green box that I can deploy as a solar installer to that customer who now has secure power instead of me going and buying parts and pieces and putting them together with shells or lithium ion or lead acid. So I need a solution as an installer, and it would really be great is what is that single box solution that the big boys can deploy and help the little boys get in business ultimately. So it's open here. Did I explain that?
I think there's a lot of comments in there rather than questions. There's a couple of other questions over here. Yes, go ahead.
We curious to see from an investor's perspective the feeling of what's going to happen in this clean tech area next year. Because most economists are predicting a dismal economy again. And depending on what your crystal ball shows, it's varying degrees of dismal, low, medium, and high. And we heard that, when you make an investment, you're looking at the risk versus return. There's the need to have a timely exit because that's where most of your return is going to come from. And if there's a slowdown in the economy next year, how is that going to affect the availability of all this capital that's accumulated in the funds and in general, and in particular the clean tech industry with a lot of these startup companies that are desperate for funding?
It's not going to be good. First, real quick on the last comment, I love the systems level thinking, right? We need more systems engineers. We don't need fewer other types of engineers, but we do need more systems engineers in clean tech. But on your question, yeah, I mean, it just raises the bar that much further for companies that are operating startups that are trying to sell. When I go back and look at my portfolio companies and what they endured in the first quarter of 2009, there were a lot of customer purchasing decisions that got pushed out, a lot of missed revenue targets, therefore a lot more cash burn. It's just, if there is a downturn, and yeah, I see some of the same reports you're talking about, it's certainly going to hurt the operations of up and running clean tech startups. Fortunately, not the really early ones from an operating standpoint, because they didn't have any revenue anyway. So, at least there's that. But what it says is, be prepared for some lean times and don't get out ahead of your skis in terms of loading of costs. From a capital standpoint, though, that's the killer. LPs have been down on venture capital as an asset category, and that's going to continue, even if things pick up, but it's going to continue because the venture capital model is broken. But LPs have been particularly told don't invest in clean tech. And what's needed to unlock that are some formative exits. I mean, you mentioned there haven't been, great exits. Until we have some banner exits that people can point to and say, aha, that's how clean tech is done. We don't have the social proof to allow LPs who live and die by social proof to allow themselves to put more money into clean tech. So what's happening right now in the clean tech venture sector? The specialist clean tech venture firms have not been able to raise new funds. Some of them have been able to raise new funds tiny, right? So the specialists aren't out there with deep checkbooks to invest. The generalist funds have been told repeatedly by the LPs, don't do clean tech, even by their existing LPs. So that I know folks who went out there to try to raise a new fund, they buried, their clean tech activities, the generalist fund, buried their clean tech activities way back on like slide 20 of the deck to their existing LPs. And as the guy told me, it was a lot of head nodding until they got to that slide. And then the LP said, whoa, wait a minute, you're devoting 15% of this new fund to clean tech? So it's not like that's been the laggard in our portfolio. Secondly, 15% is lower than the 20% allocation we had in previous funds, right? So we are backing off of it. And when I talked to this GP about that, he was like, yeah, it's tough. Well, that GP now, amongst a couple dozen others I know, who were the Cleantech guys at their generalist capital fund, now out looking for a new job. The Cleantech venture capital pool has been absolutely decimated, with the possible example of very, very late stage types of investments. That's basically just trying to do momentum investing, backing sure things. The early stage venture capital pool has been completely withdrawn, and unfortunately, if we have a downturn, and that means the acquisitions don't get done, the IPOs don't happen, we don't have the exits to look at, it's just going to be an extended prolonged period.
And tell me, Mrs. Lincoln, how is to play?
Yeah, exactly. So, the message to the entrepreneurs in the room is run really lean, don't depend upon venture capital, figure out non-dilutive sources of financing, nice word, right? And keep fighting the good fight, but just be prepared for a long run-up period. I guarantee you there will be startups that are early stage right now that 10 years from now, 15 years from now, we'll be looking at and we'll be like, wow, where did that success story come from? But you got to run through the desert before you get to the oasis.
There's a few questions here. Yes, go ahead.
Based on what Rob just said, and maybe following on some of what Mike and Mark said earlier, but going back to the last comment on your slide about the venture capital isn't the way for clean tech entrepreneurs to go, that you think is joint development, or as you said, or as Mark would phrase it, as eventual M&A activities. So the question that I have is, where are they? We have a panel here of entrepreneurs, venture capitalists, and consultants to venture capitalists. Why aren't they? And I'm sure it's not because you don't go out to them. We've got GE around the corner. Why can't we, as an industry, I don't mean to single you out, why can't we get the VC, the equivalent of the VCs, the funding source of the new generation of clean tech companies to join the discussion at the very least?
So I can comment from our perspective. As I mentioned, we're working on the AR coding. So essentially, it's a process technology. So at some point, we plan to talk to the big equipment manufacturers that supply the equipment for the existing solar manufacturing companies, the people that make cells, and then have them develop the equipment that fits to the line that they already have. And that's how the strategic partner will come when we're ready for that point. So we don't really plan to set up our own shop to bring your cells in, quote them, send them back out. That's not going to work.
Right. Let me
So
put that.
it may be different for every other company, but that's kind of the thought. So you have to look within your industry, where is the person or where is the group that is providing the value chain in that for the manufacturing activity, and then see how you can plug into that one.
And the great news is, and this is the other part of your question, I actually think we're on the cusp of seeing a wave of corporate acquisition activity in the sector. It's anecdotal, they can only speak, firsthand about what I'm seeing. But for instance, earlier this year, at one point, out of our 8-company portfolio, we had 6 of them in some level of acquisition conversation with corporates. We're seeing corporates at a higher level of venture capital investment into the clean tech sector than they've ever been. We're seeing many more of them be, apparently very serious about trying to figure out how to tackle clean tech as a top-line growth opportunity, which is where they will really pay for an acquisition. So I think we'll be there if, we don't get a double dip.
Or maybe the double dip helps.
Maybe
the qualification on your statement is these were your portfolio companies that you had already invested in.
Right.
We're talking about the next wave, the ones that haven't found the investment. Once you're with a fund, the fund generally takes you through a few steps of investment.
So you're asking, why don't corporations do seed stage funding?
But they are.
No, that's not really the question. That's a simple answer. They can't.
That's not only is I take issue with they can't, they are.
They won't.
No, I disagree, they are. We have, for example, within incubators in my organization, we have 2 companies that are being funded by Saint-Gobain in both the early stage and demo projects. We have participation by Siemens Venture Capital. We have participation by GE Venture Capital. I think part of what's happening is the strategics aren't waiting for the VCs.
Right.
They're creating their own
But
VCs.
you've answered the question I was about to ask, which is what can be done to help companies get to these companies? And the incubator model is great.
I think that the incubator model is showing to be a way that the companies look as a validation, that they're not looking at just a rank, unstructured entity. If they come out of an incubator, there is already some structure, some mentoring, some intelligence, some capacity, and that's attracting the corporate VC.
And the corporate VCs are,
And they're well moneyed.
They certainly have the balance sheets, right? But they are a lot of them haven't been in this business long, so they don't search very well. So entities like incubators that can aggregate a lot of visibility for them are very useful. Also, events like this, we should have more corporate VCs in this room.
Next time. We'll kick you guys out, bring all the corporate
please.
Mike, you had a question back there? Yes.
Yeah, I want to talk about manufacturing, because I think, Rob, what you're saying is VCs is good enough, because there's no way to make money on it, right? You fund a company and it goes to China and you lose your investment. And you're basically making money for Chinese business and the Chinese government, right, by funding manufacturing as a VC. So that's a discussion I think we need to have. You know, a lot of us in here, right, are basically doing process engineering or some form of manufacturing equipment. That helps you, but it helps you with that cycle, right? We develop a technology, the US is still the best innovators in the world, okay? But that technology is migrating into Asia, let's face it. And that's where you get the benefit of driving down costs for Cleantech, right? Who drove down the costs for solar? The Chinese. You have these vast opportunities because Chinese driven down that opportunity for solar. I think this is going to happen over and over and over, and we have to really think: is there anything wrong with that? You know, we have to reshape this. Do we have to look at the United States as overall, or do we have technologies clusters like PVMC, right, that does the R&D, knowing that necessarily it might not be manufactured in the United States, and that might be okay. And everyone wins out, and the state and federal government at this country need to realize that, accept that, and realize we're going to get the benefit of that as a country because it's going to drive costs down, and we're going to get the benefit with the downstream applications. So that's my question.
You understood the question?
I understood the question.
Okay, go ahead.
It leads into the comment I wanted to make on what Rob was saying. We have a client that was initially funded many years ago by NYSERDA and by EPRI. It was subsequently funded by people like Enron, etc. We are at a point where we had a truly global technology that's now being funded by a sovereign wealth fund in the Middle East and by a sovereign fund in China. And that is, in addition to the corporates, a source of funding that we need to get our young companies with truly global solutions, large solutions, to look at. And that's not something that American companies do well.
Sounds like a call for right capital.
Yeah, but this is a key point. Cleantech is global.
It is.
And I think one of the changes, I've been in Cleantech since before it was called Cleantech, and if you go back not that long ago, it was very kind of almost unheard of that a U.S. startup technology company would go overseas before it had grown up, scaled up, established, and saturated the U.S. market. And then maybe international was something you'd look at. And it kind of worked both ways. Both it was considered you didn't have credibility to go overseas until you had done that, and overseas investment wouldn't think about it until you had done it. So there's been a pretty radical shift in the last startup companies get funded. I mean, there was one that the Going Green, Always On conference winner, like about a year ago. They got funded and they immediately did their first plant in China. And I know of a company that Bright has some involvement in, that so money's coming from Europe and Russia and going to U.S. innovation, and they're already in talking to manufacturing in Asia.
So the closing dinners are borscht or dim sum instead of spaghetti.
Well, but it's at the end of the day, it's about good strategy. I mean, does this strategy work? Is it going to make the company work? Is it going to satisfy the needs of the investors so that they don't abandon their work?
From a New York perspective, we do have a lot of companies in New York and frankly universities as well who are developing a lot of really interesting process technology, and one of the sensible ways perhaps to deploy that is by licensing it to counterparts in other countries who then bring capital and attack those markets too. If you're a startup company, this is sleeves from your vest, right? You weren't going to go after the CIS market anyway, and maybe it's a good way to bring some capital in. I think there's a lot of room for those kinds of plays because, as we're talking in response to your question, Arcadia. Okay, so no VC. Where's the cash sitting? It's sitting in corporates. It's sitting in sovereign funds. It's sitting in family offices. Those are the players we need to bring into this conversation.
And just to extend this global idea business a bit, and we've got to remember that the United States